Areeb, can you hear me?
Yeah, I can hear you now.
Can you hear me okay?
Yep, can hear you fine.
Yeah, perfect. Assalamu alaikum.
Yeah.
We've got Abul in the waiting room as well, I think.
Abu Wahid Invest, I'm assuming that's what he's saying.
Yeah, okay. He should be here.
Okay.
All right, Assalamu alaikum, Abul. You there?
Assalamu alaikum.
Hey, welcome, Assalam. Okay, perfect. All right.
How are you, Zeeshan? You okay?
Yeah, good. Alhamdulillah, yourself?
Yeah, all good, brother.
Good. Nice to see everyone formally dressed. I got a haircut while this happening.
Oh, I wish I could.
Did you get a haircut?
Yeah, my mum gave me a haircut.
Nice, nice.
Oh,
Hi, everyone. Marwa.
Hey, Assalamu alaikum, Marwa. Thanks for saying this on.
That's all right. Inshallah. Good luck. All the best to you guys. Are you going to admit all or you're going to wait?
Yeah, just before we start,
Are we panelists?
we're all panelists now, aren't we?
I can see
Okay.
we're participants.
how do I make everybody co-hosts? 1 second.
So just right click. I'll do Areeb. It's fine, Z. You want me to? I'll just make him co-host.
Yeah,
Areeb.
please, if you don't mind.
And
Right.
Abu as well,
Yep.
co-host. There you go. All of us are now co-hosts.
Let me
You
change
got
my
it.
name.
Can you see, or at the bottom of the screen, you should see all of your options, reactions, chat, participate.
Yep. Yeah,
Yep.
got all of that. So recording is going on now.
It is.
Okay, perfect. I'm saying everyone in, and we've got quite a few people in the waiting room. All right. So just before we start, everyone okay with the questions? And we'll just get stuff in the Q&A in the chat window. Okay, perfect. Okay, cool. Everyone okay to start if we start admitting people?
Yep, I'm just
Yep.
going to press admit all then.
Okay.
Right, that's enough.
People coming in. Hey, assalamu alaikum for everyone just joining us, and welcome to the Investing During Lockdown webinar with Wahid Invest and with Yielders. So please bear with us for a second whilst we just wait for a few attendees just to be admitted, and we'll be kicking off in a couple of minutes. Okay, perfect. And just a reminder, if you have any questions if you have any questions throughout the webinar, just drop them into the chat window. Okay, perfect. Okay. Zeeshan, did you make it into an office? Looks like you're in an office space.
Yeah, back at our offices in Canary Wharf. Started
Oh, really?
a couple of times a week just to ease ourselves back into it.
Oh, very nice.
Very different. It's like a go.
Yeah. Is it properly social distance then?
Yeah, there's not a huge amount of people here, but there is the correct markings everywhere, all of the shops, all of the corridors affected.
Mhm.
One-way systems, and yes, it's interesting.
Yeah. Okay, perfect. I'm just realizing this this chiming sound of people coming in. Is there a way I can stop the chiming?
Probably the easiest way for you to know that there's other people waiting, right?
Yeah, I'm just worried it's gonna come throughout.
Okay, so I can remove the chime.
Yeah, do you mind doing that?
Yep.
Okay, perfect. Okay, great. Thank you, everyone. All right, we've got 55 people at the moment. Good. So everyone who's just joined, just letting you know that this meeting will be being recorded. So that will also include the chat. So just please bear that in mind for questions that you'll be asking for the Q&A. And I also must inform you that that nothing that is said during this webinar constitutes investment advice. So so please bear that in mind as well. Okay, brilliant. So I think we should kick off if you guys are okay for doing that.
Yeah.
Brilliant. All right. Well, thank you and welcome to everyone. Juma Mubarak. Thank you for joining the Investing During Lockdown webinar with Yielders and with Wahid Invest, hosted by myself, Areeb, here from Kestrl. So before we kick off, I think it would be really good just to do a quick introduction to the speakers. So should we start with you, Zeeshan, just doing a quick introduction to yourself?
Sure. Assalamu alaikum, everybody. Thank you for joining. My name is Zeeshan Uppal. I'm co-founder and COO at Yielders. Yielders is the first Islamic fintech to be directly authorized by the FCA in the UK. And effectively, we provide real estate investment opportunities to everybody from as little as £100. What we have devised is a piece of technology to be able to allow the investing into real estate to be seamless and easy, making a traditionally inaccessible asset class of real estate accessible to the masses.
Perfect. Thank you very much, Zeeshan. And over to you, Abul.
Assalamu alaikum, everyone. My name is Abul Uddin, Business Development Manager at Wahid Invest. Wahid Invest is an online investment platform that helps people invest their money in accordance with Islamic principles and ethics, which is very similar to socially responsible investing. Wahid Invest is a discretionary fund manager, which means that we've carefully selected a range of different portfolios, including doing all the screening needed to make sure that it's Sharia compliant. What we've then done is allowed our users to choose one portfolio based on your attitude towards investment risk, and then look to fund your account. We then take care of the rest. Open an account takes less than 10 minutes with us from start to finish. And on top of that, whilst we recommend with any risk-based investments, you should be looking to invest for the medium to long term. It's only a guidance, and we allow you to deposit and withdraw anytime you like.
Perfect. Thank you very much, Abul. And that only leaves myself. So hi, everyone. I'm Areeb Siddiqui. I'm the founder and CEO of Kestrl. Kestrl aims to become the UK's leading ethical and interest-free payments and wealth management platform, which means that we're essentially an app-linked debit card, which helps you to store your money securely, spend it in a way which is compliant with your personal values, which for many Muslims means their religious obligations. We're about to launch in 2 weeks' time with our beta. So if you are interested in that or in any of the companies which are mentioned here today, we'll be including links to our websites in the chat. So please feel free to check those out. Okay, brilliant. So without further ado, let's jump into the panel discussion. So my first question for you both is, obviously lockdown has shaken up the way in which we do business and the way in which we work with each other. So how has the lockdown and the COVID situation affected the way in which your businesses are run? Should we start with you, Zeeshan, with Yielders?
Sure. So I think for us, it's been an obviously hugely interesting time for everybody. But being a fintech company and technology being the cornerstone of everything that we do, we've created a lean and scalable solution and proposition to allow working from home to be done pretty seamlessly from everybody in the team. So I think the transition for everybody leaving the office and having to work from home has been pretty seamless, and we've managed to sort of carry on as if nothing can happen, even though hugely adversely affected both in this country and further afield in the rest of the world. So I think in terms of our team, great testament to how everybody's able to just work from a laptop wherever you may be in the world. So the technology element of the platform has been really helpful. Product-wise, it's obviously been a little bit harder. I think looking at what's been going on, particularly in the UK in relation to real estate, it's almost grinded to a halt with regards to transactional activity. The supply chain's massively affected. You can't get RICS valuations done or agents coming to properties to be able to value. You then have the impact on solicitors and law firms to do conveyancing. So really the entire supply chain has been affected. Not really allowing for new products. And what we decided to do very early on during the lockdown period was, post that statement onto our platform and make sure everybody's aware that we will not be acquiring any new assets for the retail element of our business per se during this period, predominantly because of the supply chain and not having an understanding of how the real estate market really was going to react to what had been going on. So although it's been a very interesting time, we've had plenty more time to, update the technology element of our platform. So investigating and exploring new ways to help things more for customers when we do start going back online. But not only that, it's allowed us to connect, I think, a bit more with our investor base as well. You know, we've continuously started providing blog series throughout this period as well, helping to inform and educate our investor base. So although the product side of things may have slowed down, we very much have continued to engage with our investor base, continue to educate our investor base, and just prepare ourselves, I think, for what now has started to ease up in terms of a lockdown, where we start to look at acquiring new assets going into the next couple of weeks, which we've already started to do. So yeah, from my perspective, it's been fantastic. I think everybody's has really dealt really well with the difficult issues surrounding the COVID situation that we've been facing.
Okay, amazing. Thank you very much. And over to you, Abul. Same question to you.
Yeah, well, I suppose like Zeeshan and Yildiz, from an operational perspective, it hasn't really had a major impact on us. Again, you know, being a fintech and technology being the cornerstone of our business as well, it's been quite an easy transition, should I say. I suppose for us as a business, the main area is that, you know, whilst we are technology based, we recognize that, you know, having that human element, having that human touch to our business is important as well. And I think that's, for us, has been the main area that we're missing in terms of meeting with our clients face to face. We used to do a lot of regular face-to-face meetups. We called Tea with Wahed, where we would meet with clients or potential clients and talk them through our services and answer any questions that they may have, you know, face-to-face. I think it's a good opportunity to network as well as learn about our products and services and get to meet the team as well. But alhamdulillah, you know, during that time, we've always done webinars and things like that, educational courses online. And we're just concentrating on that until we can start to see people face to face again. Okay, perfect. Thank you very much. So the next question, it also comes in from someone in the Q&A, is what changes have you actually seen amongst your clients, the users? Has there been a change in the way in which people are investing during this time? Before we jump into that, at Kestrl, we've been doing some research as to the financial impact of lockdown on many people, especially on the demographic of Muslims, British Muslims here. And what we found is that there's a real divide between a number of Muslims who are struggling to make ends meet, those who, you know, they're not able to be, you know, as lucky enough as some of us to be able to work from home, and they've actually been furloughed, lost their jobs, and you know, have seriously impacted their income. And they're looking at budgeting solutions more so now than ever. But then there's another subset of Muslims which they're able to work from home. They're finding that they're saving more than ever before on transportation costs, on eating out, on entertainment, and now they're actually thinking about investing more so than ever. So I'm really interested in knowing, what are you guys seeing from your side of things? Shall we start with you, Zeeshan, again, with Yildiz?
Yeah, sure. I'd echo your sentiment with that wholeheartedly, to be honest with you. We've seen generally a split of our investor base as well. There's been a number of investors who have required their capital back from our investment opportunities. So our secondary market has become invaluable during this period. It allows people to exit their investment opportunity during the investment term. A very liquid secondary market whereby people are able to sell their shares on the platform, and generally speaking, within a 24-hour period of anything that's been listed in this time is sold out. That then echoes the sentiment of the flip side of people who haven't been struggling and actually maybe have some more time to educate themselves on alternative investment opportunities such as ours. So our user base and people actually signing up to the platform has continued to grow. You know, there's a lot of people on there now who are requesting new investment opportunities. As I've already mentioned, when the secondary market ones do go live, you know, are pretty much secured and taken up by other investors straight away. So that split definitely has been seen from us as well. There are people that need their capital back, obviously, in a struggling time like this, and they're able to do that very easily and simply via our platform. And then the flip side, people coming in and wanting to have more education and understanding of alternative investment opportunities. And I think what this time has allowed for those sorts of people is the time to do so. You know, generally speaking, otherwise people are very wrapped up in their day-to-day lives, whether it be work, family. What this time has really allowed for, I think, is people to sit back and appreciate that there are things that maybe time would allow them to do and look into it with a bit more detail. And that certainly has had an impact on the increased user base and the increased users on our platform interacting with us, whether it be, just coming on to educate themselves and understand exactly how we work, or engaging with the team on a day-to-day basis to understand any difficult questions that they might want answered. So yeah, very much echo the sentiments. I think there is that split, and it's being able to manage both elements of it. I think, we've got to be able to show the leniency towards investors needing to liquidate. So in some instances with our secondary market transactions, we've even waived our relisting fee. And then on the flip side, ensuring that we've got enough information and enough forward projections to understand how we're going to be able to service the new investors that are coming on board, chomping at the bit effectively for new investment opportunities.
Perfect. Thank you very much. And just to remind us and the crowd, Zeeshan, when is the next Yielders deal flow coming online?
We are in the middle of conveyancing with our most latest deal. Expectation is probably the first or second week of July, very much at the final stages, so that should be ready for investment. Probably, let's say conservatively, second week of July. Just before lockdown, we actually listed our last asset that went live, and it sold out in, I think, a record time of 16 or 17 hours when we first initially posted it. So it's a really big thing for us here, and our expectation, I think, because there's been so many people waiting, that the next one, when it does come live, will sell out pretty quickly as well. So alhamdulillah, good problems to have from our perspective, definitely.
Definitely, and we'll be sharing links to all of the speakers' websites, so you can check them out during the conversation. So over to you, Abul, from Wahid Invest. It's a slightly different sort of clientele over at Wahid. So what kind of insights can you shed on this?
I suppose the type of product, I suppose, is slightly different, but the clients are very similar, I would argue. People who are looking to invest for their long-term future. For us, we've had exactly the same. We've had we've had certain clients come to us and request funds. This is why being a risk-based investment product, we always say to our clients, be prepared to invest for at least 3 to 5 years, and so on and so forth. And we take a lot of pains, to reassure and remind people that this is the type of investment time frame that you should be thinking about. But we also recognize that emergencies do happen. It's life, right? And so for us, we've always said from the outset that there isn't any penalties to withdraw. You can withdraw at any time. As I said to you earlier, we will let our customers just click a button to withdraw as and when they need to. But obviously making sure that, because it's risk-based investments, they're aware that they may get back less than what they originally invested as a consequence. But on the flip side of that, we've actually had record-breaking weeks in terms of new clients onboarding, investors, increasing their deposits with us. And for a lot of people, they've looked at it and said, well, whilst the markets are down across the globe, the majority of our clients have looked at it and thought, well, actually, this is a good buying opportunity, and they've deposited funds as a consequence. That's why during the lockdown, we've actually hit the milestones globally that, we're at over 100,000 clients and managing, $100 million in assets. Alhamdulillah.
Okay. And that leads me very nicely on to our next question, which is more about how lockdown, coronavirus, and market sentiment has been impacted with you in your specific asset classes. So from Yielders' perspective, more about property, especially in the UK, Wahid, wider portfolios encompassing a much more global kind of perspective. Shall we mix it up a bit? And Abul, you go first from Wahid's perspective.
Yeah. So again, probably sound like a broken record here, but when you're looking at investing, I think fundamentally, and I'll take a lot of pains, people who know me and have spoken to me, I will say diversification is key, right? When we're talking about risk-based investing, we are talking about asset classes which can go up as well as down in terms of values from time to time. So I think the old mantra of don't have all your eggs in one basket is paramount, and more so, given what we've recently gone through. Having said that, markets, whilst they have first 3 months of this year, that equity markets in particular was down 30%. But we're now sitting here, 3 months subsequent to that, with markets up over 30%. So and year to date, 1 year period, the Nasdaq is up 32%. Gold in that period is up 25%. Bonds along the way have given you a 4 to 5% income yield. as well as capital growth in that period as well. You know, and I always say to people, look, have as many asset classes as possible within your overall portfolio. You know, the overall portfolio meaning not just with us, but your general life. So that will include property and things like that as well. That's the only way that you can make sure that you can achieve your long-term goals. It's not trying to concentrate on one particular thing, because I don't think that one thing will do everything for you. It's having that good mix, which will allow you to hedge your bets, I suppose is the phrase, to make sure that your long-term goals are achieved by doing so.
Okay. So the ultimate message there is diversification, which Wahid
Yeah.
does really help you to do through his portfolio model. So Zeeshan, from your perspective, how has it impacted the UK property market? What are you guys seeing in yielders?
So I think it's again, it's almost we're able to split into two based on where we currently are and the understanding of the market. You know, I think the Guardian reported there was £86 billion worth of real estate transactions that were on hold during this 3-month period, which is an astronomical amount if you can think about it. But you know, the reaction to that for us was looking at the state of play effectively and understanding, you know, it doesn't make sense for us to go and acquire assets in this tumultuous period. It's going to be very difficult for us to understand the true value of an asset in this state, which is why we decided to, you know, take a step back and understand what the impact of COVID was going to have. Other news outlets have also reported a 3% general reduction across the UK in terms of property prices coming down. So I think during this time, particularly, new product for us was something that we thought about very, very carefully and decided upon a stance that, you know, given the supply chain is adversely affected by what was going on, not to acquire anything new, because we could have bought something, you know, had a ballooned value at the beginning of this 3-month period, and by the end of it, because of the impact of the macroeconomic conditions, we could have been sat on an asset which was effectively sat on negative equity. So a lot of thinking did go behind us taking this pause, but what it has allowed for is us to effectively batten down our hatches with the existing products that we've got, ensure the management of those are consistent, and we're able to continue to deliver the returns that we've had on offer. So, I mean, 48 months in a row and counting now, alhamdulillah, of dividends being paid out on the first of every month. Something that we're hugely proud of at Yielders, that we continue to be able to pay dividends out to our customers, even in the most difficult of times. And I think going forward, then the split, even though the management and execution so far during this period has been, like I said, protection rather than growth. Going forward for us, it's actually a really exciting time. You know, the real estate market has been impacted, allowing us to with our network within, you know, agents and deal flow partners that we have is actually now look to acquire assets which are now below market value. You know, the impact of the real estate market is being felt at the moment, and we're able to then use our cash and ability to go and buy new assets quickly. And being cash heavy in a market where, you know, there is a retrace of somewhat, we're able to go out, you know, buy good value assets, place tenancies within these, and deliver continuous strong returns for our investors.
Okay, amazing. And that again leads us on quite nicely to the next point, which is within the UK especially, the UK has one of the poorest levels of financial literacy in the Western world, with the majority of people not investing despite having the means to, simply because they feel like it's not for them, and they just don't have the education or the ability to go into it and look into it themselves. What sort of guidance would you provide to people when it comes to how to up their financial literacy and figure out whether investing is really for them or not? Should we start with you, Abul?
So I mean, we have a learn section on our website. There's a couple of different sections in there. There's an investing 101 where we've done quite a lot of YouTube videos about investing. What does a diversified portfolio look like? Why is diversification important? How do we construct our portfolios? What are the different asset classes that we go through, that we invest in? What do they mean? Why are we using them? So we do all of that on our website. So it's a really, really good source of information for the new investor. We also do, I make myself available and I do regular calls with clients, just talking about our asset classes in a lot more specific detail. If there's certain things that people want to know or ask questions which they may or may not find on our website. But in addition to that, we have our friends over at Islamic Finance Guru. I think that's a really, really good source of information. There's a lot of people nowadays doing a lot of educating online, social media, Islamic Finance Guru, our websites, Google is your friend, as they say. You can find a lot of information on the internet nowadays.
Absolutely. Zeeshan, would you echo that?
Yeah, 100%. I think financial literacy is something, unfortunately, we're not taught as we're growing up in the education system, and it's not something that people really have an understanding of unless they go out off their own bat and really try to understand how things work in the financial world. Similarly to Wahed, I think education is a massive part of what we do. We've got an entire knowledge center on our platform, which includes regular blog updates, looking at not only news that's current, but also trying to fill the gaps where maybe people have in their knowledge in relation to economic issues, financial issues, and just generally being able to create an investment journey with us. We're very much of the mindset that this is a long-term investment opportunity, and it's a way for people to understand compounding and residual income, not thinking of alternative investment opportunities like ours to replace their income, but actually to enhance it. So, working away as everybody does really hard, but investing and saving your money to help it grow with you. That for us is something that's really important. And what we've always done from the very beginning of our business, from inception, is ensure everything is completely easy to understand, very easy to understand, simplistic language, transparent information, so people actually know exactly what you get involved in. From our perspective, it's probably a little bit easier because real estate is very much bread and butter. There's not too many difficult terms to understand. However, we've ensured to make sure that it is very simple language. The average person can come onto our platform and get all of the information that they need to be able to make an informed decision about investing. And I think that ongoing, the ongoing education is very important. So it's not just about leaving people up front, giving them all the information. It's continually educating them as they progress with their investment journey with us. And I think it's hugely important. Unfortunately, the Islamic finance industry technically has always been one step behind traditional finance. What the Islamic fintech industry, which is obviously more so what we're speaking about today, has allowed is that democratization of finance, lowering barriers to entry for traditionally inaccessible financial tools and financial understanding, and providing that information to the masses using technology, using the internet, and just allowing people to consume that information. And what we've got here is a fantastic team as well. So not only have you got that information as you land on our platform and you're able to understand and learn about these things, the team that then sit behind the FAQs that we've got, the instant chat function that we've got, the phone that you pick up to and speak to us, people understand how to then explain to our investors the simplistic nature of what we do. And hopefully, inshallah, the view is to help grow that and sustain that. And I think, stuff like this, the webinar that Kestrl have done, Abul's already mentioned IFG, competition in the Islamic finance fintech sector is also massive. I think the more players that we have involved and the more people doing this education is only going to benefit not only the consumers, but us as businesses, driving one another to do better, to provide more transparent and more informative information.
Yeah, I'm sure you all agree there's no shortage of competitors out there at the moment. So yeah, I'll add it from a Kestrl perspective, because this is something we're very passionate about, financial education and financial literacy. What we're trying to do at Kestrl is actually to create the entire ecosystem, right through beginning with budgeting and ending up at investments and figuring out whether that's right for you. So, and someone's asked this question as well, will we be putting out the results of our survey into the financial impacts of Muslims during lockdown? Yes, that will be coming out inshallah next week. And it's really to aid our overall thesis about, when is the right time to invest? What is the kind of chain of things that you should be looking at when it comes to personal finances? And really it's about, first of all, you need to start off with budgeting, figuring out, do you have more coming in than you have going out? Then step two, it's all about building up an emergency fund. which is enough to make sure you have 3 to 6 months worth of your outgoing secured and saved up in case something were to happen, you to lose your job. Then when it comes to Muslims, a big part of it is about paying off your debts and making sure that you haven't attained any debt and you're not paying interest on that. So getting rid of that. And then you need to start thinking about, should you be saving and should you be investing? And this talks to some of the comments that have come up during this as well, is when is the right time to save and when is it to invest? And, you know, I think it's been echoed by what both of you have said during this. It's really all about what your goal is and what you're trying to achieve and the timeline in which you're trying to achieve that. I think many people assume that investing is something you can dive into and make a quick amount of money and then run away with, which is definitely not the case. It's not something any of these companies would be stating or guiding you towards. You need to understand investing is a long-term game. There will be ups and there will be downs, and you need to be in it for the long run if you want to see results. Okay, perfect. So that's the end of the panel discussion part of this. We're making good time on that. And I'd now like to open it up to the Q&A. So again, everyone in the audience, if you have any questions, please drop them in, send them to us privately. We'll be going through and picking them out one by one. Okay, so just gonna pick up the first question, which has come through, which is quite an interesting one. So is an investment time frame less than long-term deemed haram? How long would you define to be the long-term investment? That's an interesting one. It's not something I've come across before. Zeeshan, Abul, do either of you want to pick that up?
Yeah, I can. Well, first and foremost, look, I think like a lot of the discussions we've had so far, anything that we're talking about here shouldn't be construed as financial advice. I need to make that very, very clear. But also on the flip side, certainly Whitehead Invest is not a fatwa issuing company. So for us, we use specialists. We have scholars on our board who determine that the investments that we're making is Sharia compliant and therefore halal in your hands. Fundamentally, the investment term is down to you, and it doesn't matter whether it's 3 years, 5 years, 10 years, 15 years, 20 years. What you need to bear in mind is that whatever time frame you're investing in, what you're investing in is halal. And that's the key thing. So I don't think there is a definite to say, 2 years is haram, but 3 years is okay. I don't think that it will ever be, something which any scholar will say. Fundamentally, whatever the vehicle that you're investing in, that needs to be halal. And that's what I suppose, we're trying to concentrate on and make sure that is for our underserved community.
Yep, absolutely. Zeeshan, I don't know if you've got anything to add to that.
Yeah, I think it very much so depends on the product. Similarly for us, we took a decision very early on that rather than calling ourselves Sharia compliant, what we would be was Sharia based. The reason behind that is because traditionally we found Sharia compliant type financial offerings will take traditional financial products or terms and contractually change them to become Sharia compliant. What we decided very early on was to be a business that was Sharia based on three very simple principles in relation to our offering, which was no leverage or riba associated with any of our products. So there's no bank or financial product associated with anything that we do at all. Investing in an asset class which is volatile. So generally speaking, if you look at the real estate market over the last 30 years, there's been an upwards trend, obviously with some differentials. And then the final piece being investing in something which is transparent and easy for people to consume and understand. That bearing in mind, I think what really matters in terms of investment term and the length is the type of product that you're investing in. To see the sorts of returns that we're able to offer on our real estate deals is there is a level of investment term required before you see maturity. Are you going to see capital appreciation in a real estate deal after a year? No, probably not. There's material changes of a percent or two either way. Are you going to see an impact over a 5-year period? Yes. You'll see the compounding of your rental income, and then the expectation of a 5-year shift in the real estate market, either up or down, determines the way that we assess and project our returns effectively. So I think it is the differential really is on the product, and I completely agree. I don't think there is a halal investment term per se. It's dependent on your risk profile as an investor, and the actual underlying product.
Yeah, absolutely. I think it's definitely more about being disciplined and understanding that investment is a long-term goal. and just, you know, trying not to be in it for the short run to make a quick buck. Okay, perfect. On to, there's a very interesting question, which is all about, it's quite a hot topic at the moment, around ESG investments and sustainable investing. So I'd love to get both of your views on that, which is, to what extent do yielders and Wahid want to go into sustainable investing? And what does that mean for both of you as companies? Abul, should we start with you, with Wahid?
Yeah, so look, fundamentally what we're looking to do when we're picking and choosing any funds or investments that we're making, there's a couple of different things we look at. First of all, it's the financial screening, making sure that actually from a Sharia compliance perspective, that the companies that we're looking to invest in, they meet those requirements. Second of all, it's a business screening and making sure that the business that we're looking to invest in, you know, meets all the requirements in terms of the activities that they're undertaking. For us, that will mean that from a social responsible perspective, we're not looking at over-leveraged companies. We're looking at companies which work within their means and they're highly profitable as a consequence. So for us, they're the fundamentals that we look at first and foremost, which aligns to ethical as well as socially responsible based investing.
Okay. Okay, perfect. And Zeeshan, but over at Yielders, I know you're starting to explore more stuff in the green space, aren't you?
Yeah, as I said before, I think this time has really allowed us to investigate and look at potential different products, all in relation to, you know, whether it be land or real estate. Energy, the energy sector is something particularly interest to us, something that we are working on and hope to be able to present in the not too distant future. Underpinning our lease agreements, so a lot of generally with our deals that you'll see on the platform, the socially good element of what we do. Some of the tenancy agreements are with tier 1 managing agents, so these may be local housing authorities or council, which will place people who are unable to find housing or unable to afford housing into some of our properties. So there is a already existing social good element to the assets that we offer, and obviously the fact that it's completely away from traditional financial products in terms of leverage or interest does help us as well. But yeah, I think you know, the investigation and work into new product lines and product classes in relation to renewable energy is something that we're looking at very closely at the moment.
And another question that's come through, which is related to that, is do you think that ESG or indeed halal investing could actually lead to more profitable returns than conventional type products? Do you think that's the case?
Sorry, I will go on.
No. So from our perspective, I suppose companies which are less leveraged are the ones who have performed far better during the COVID-19 period in terms of markets and the shares of certain companies. So we've gone through a period of credit crunch and people have learned their lessons and they've tried to shore up their balance sheets. But the COVID-19, because of that, and it looks to be a lot more protected, the companies which are not folding are the ones which, you know, credit crunch was all, you know, financial institutions focus. This is more globally impacting everybody. So the companies that we're hearing about folding, they're the ones which are highly leveraged. So from our perspective, you know, this is part and parcel fundamentally of what is going to be the key buzzword moving forward: socially responsible, ethical, and it's a massive growth area. We've done some research, and you know, the millennials, the next generation who are tech savvy, they're twice as likely to invest in something which is socially responsible or ethically focused in terms of investments. And you know, the next generation is what's going to inherit the world. That's a market which is worth approximately about $2.1 trillion right now. So from our perspective at Wahid Invest, all of our investments are socially responsible in terms of being Sharia compliant and things like that. So for us, it's, you know, it's a massive growth area. We recognize, but now I think generally the whole market is now recognizing that actually you need to be a lot more ethical, a lot more socially responsible. This is where you're hearing about, you know, the large fund managers now all of a sudden, you know, picking up on certain companies that they invest in and saying, well, hold on a minute, you haven't met the targets of climate change and things like that, things that you've signed up for and said, yes, I'm going to do, but you haven't actually done. And so we should start to hear a lot more about that. So there's going to be a lot more accountability now as a consequence as well, which is, is very, very good.
Yeah.
I think to add to that, I think it's dependent on investors' risk profile as well. You've got to have that diversified portfolio effectively where you might have slightly riskier investments which are yielding you more of a return or more of a capital appreciation. But I think going forward, the sentiment that Abul was just talking about in terms of the new generation of investors, millennial investors that want to impact society, it's not just about the returns and numbers on offer. It's about, okay, what social good can we do via investing? And I think that's a great tool and a great mechanism to allow forward thinking in relation to socially good investments, and hopefully it becomes a well-oiled machine where it's impacting society in a good way, but also presenting good returns for investors as well.
Absolutely. And at Kestrl, we're definitely seeing a trend towards people looking, especially younger Muslims, who feel less concerned with ticking the no interest box and meeting that, and they're more concerned with knowing that their money is doing good in the world, which is more what we understand to know as ethical investment. So that's what we're seeing, and we're really trying to facilitate through reaching out to people such as yourselves at Yildiz and Wahid, hopefully bringing you and similar brands onto our platform, and also allowing people to understand exactly where their money is going, and being entirely transparent as to how that works. Okay, cool. So I'm just going to dive back into the Q&A. So good question here. What books would you recommend for general investment strategies or beginner investors? Bearing in mind, I'll just state once again, nothing that we say here constitutes investment advice. So Abul, do you want to have a go at this first?
Where do I start? I suppose it depends on what your interest field is. But a book which I really, really enjoyed when it first came out, which obviously they made into a film afterwards, is The Big Short. If you want to understand, how markets work, how easy it can be to fall into pitfalls, that's a good starting point. But fundamentally, for a lot of us, I think that talks about things which are riba-based, interest-based, and generally not halal. So I would say stick to sources which are going to give you good education pieces, but focused on Sharia compliance being fundamental and important in everything that we're doing. So reach out to our websites, the journals, the FAQs. The journals go over every month updates in terms of what's happening in the markets. There's videos on there, webinars from our head of portfolio management. He's from JP Morgan and Google. He used to manage Google assets. Before that, there's webinar recordings of him on there, as well as IFG. I've mentioned it before. IFG, they do a lot of really, really good pieces on a regular basis, just talking about different aspects of financial services. So that's probably where I would suggest, if I was talking to myself 20 years ago, I would say start there. Okay,
perfect. Zeeshan, what about yourself?
Two that stand out for me, probably that helped me in terms of financial literacy early on in my career. Rich Dad, Poor Dad, I thought was a fantastic book in terms of the simplistic nature of effectively defining what an asset is and what a liability is, and how you can make that work for you with, almost real life stories about how the author had gone about it. And then I think another one, Think and Grow Rich. That was again a simple book for me to be able to consume and understand complex financial information and really apply it to real life scenarios and be able to, try and change my mindset about how I thought about money and finances. In addition to that, I think, The Economist is fabulous in terms of the information that they provide and the articles and views on stuff. The FT obviously also as well, broadsheet, which does provide a lot of information and a lot of different things for people to be able to understand. But I think, again, coming back to our own platforms, the information that we're able to consume on our platforms, we've made it such that it is consumable. It's very easy to understand. There isn't any financial jargon. And again, simplicity of language for us is probably the most important thing. We don't want people to get tied up in complex terms, and it needs to be simple, transparent, So yeah, I think continually engaging in those two books for me definitely stand out. And then, you know, the work that, like Abul says, IFG have done, I think they're fantastic in being able to disseminate information. This work that Kestrl are doing in terms of, again, lowering those barriers to entry, giving people a platform to be able to discuss issues such as this. And yeah, all of these things combined, I think, are really important for people to get financial literacy and knowledge.
Yeah, amazing. I'll just add one quick thing because you know, it's you know, these guys have done an amazing job. Which is a book that really helped me out early on was The Intelligent Investor by Benjamin Graham, which was, you know, was originally published in 1949, but there's constant republishings and re-edits of it to make it more relevant to a modern audience. But you know, the core terms in there are still very relevant to this day. Benjamin Graham is widely considered to be one of the best sort of strategic investors of all time. And I think he really does a great job of splitting out what is the difference between investing and what's the difference between speculating. I think with the rise of a lot of these platforms like Trade 212 and you know, free trade and all of these quick things where you can look at the stock market and sort of jump in and expect to make quick money and then jump out. I think he does a really good job of saying how that is not investing, that's speculating and basically gambling in a way. So it was really sort of an eye-opener for me quite early on, and I couldn't recommend it more highly. It's a big book. If you don't have the time to read it, there's plenty of like YouTube videos which say like 5 quick points, 5 key takeaways from those books. So do check those out.
Mention that point because you know, we were talking earlier about millennials and their mindset in relation to investing. I think there's almost two very different groups when it comes to that. You've got the group that look at this almost instant gratification of, you know, I invest in, you know, want to do forex trading, for example, and I'll earn so much money really quickly. And then you've got the other group who are a bit more conscientious and looking for socially good investment opportunities, longer term type returns. So it's interesting to see the difference between the two. And when we're engaging with, you know, millennial customers and sort of younger customers, it's always good to speak to them and understand how they view financial
and
on investing.
Definitely. And we've had another question that's come in around that. It'll be quite interesting to get your takes on it. Someone has asked, what resources do Yielders and Wahid provide which help investors to invest themselves rather than referring to a firm to invest on their behalf? Would you recommend doing this? So basically becoming their own kind of active investor, making informed decisions for themselves, or would you suggest becoming a passive investor? So I'll just state again, nothing we say here is investment advice. You know, I think it's a very interesting topic. So I don't know who wants to have a go at that, active versus passive type of investment.
Yeah, I don't mind starting with that. I think us as a business, we're fundamentally a passive fund manager, discretionary fund manager. So we encourage investors to invest with us. Why? Because for the vast majority, they don't have the time, inclination to invest themselves. Also, you know, you know, it's not just about researching the company and you know, what's the price to equity ratio, or, you know, what's the debt to equity ratios and things like that. All of these kind of things are things which can consume a lot of time. And I've done so in the past, in my previous life as a banker. But fundamentally, the vast majority, and me included, and I've been in the industry 20 years, I don't have the time or the inclination to do so. If you do it, and make sure that you are looking at all of these kind of things, but also look at the financial screenings to make sure that what you're investing in is Sharia compliant. Now, what I would say is that there's no right or wrong to this. If you feel that you can do single investing, active investing yourself, do it. You know, as long as you understand what is needed as a Muslim to invest in single companies, then do so. What I would always suggest is perhaps a core satellite approach to investing. You know, the phraseology is essentially you have a larger pot, which is your core portfolio, which is perhaps passively managed by a specialist. You know, as I said to you, our head of portfolio management, he's from JP Morgan. Previous to that, managed Google assets. You know, our investment committee is made up of professionals who, you know, combined, they have over 100 years worth of experience in investing in the stock market. So for the lay person, why wouldn't you want to take advantage of that? Why wouldn't you want to let a specialist who's looking at this on a day-to-day basis for you do that for you? If you then feel, well, actually, do you know what? On top of that, I like this company. You know, one particular company may be doing well because of the fact that actually it's a lot lower than I perceive it is going to be, and I think I can see growth there. Then yeah, use some of your money to do so, and that's the satellite. So it's using some of your money, not all of it, and not the majority. It's some. Why? Because long term, being an active investor, you're not going to beat the market. You may do 1 year to the next or things like that, but long term, historically, the passive investor has always beaten the active investor. So why put yourself through that for the vast majority of your funds to do, put yourself at that risk? Yeah. But if you are inclined to make those kind of investment decisions, Bismillah, do it.
Okay. Zeeshan, would you echo that?
Yeah, I think to a certain extent, I think it's always good to almost think of it in a way that regardless of having a passive investment opportunity, you should be educating yourself along those lines anyway. If you've investing your hard-earned money into something, surely the underlying element of it, you want a better understanding of. At least that's the way that I think when it comes to certain things, especially given how hard it takes to earn money. I think the education piece around it is hugely important. But what fintech and back in sort of 2015 when we started off, fintech was still very much a buzzword. But I think we're actually starting to see the impact that it's having now. These technological platforms, which take traditional financial tools and make them accessible to everybody, is really giving a rise for passive investors to allow to grow that marketplace massively. I think aside from businesses like ours in the mainstream, you've got things like Nutmeg, Revolut, these sort of things that will allow you to look at complex financial instruments and use them in day to day. So I think, yeah, it's hugely important to have that passive income. And the way I always think about it is having avenues of revenue, almost. So you've got different streams of income. You're able to manage all of them at the same time. So having some passive ones that you have a good understanding and education that you feel comfortable with from a returns perspective, but also in this instance, ethical and religious perspective, that a combination of all of those things is required to have a good financial health going forward.
Okay. So long story short, I suppose to answer that question is, we are a little bit biased because both of these are passive platforms, but at the same time, the evidence does show that passive investment does beat active investment in the long run. And historically, it has shown that to be the case. A very interesting question has come in, which is about savings products and savings accounts, especially offered by some of the halal institutions which are out there today. It's a very pertinent question because, as you know, interest rates across savings products in the country have hit an all-time low. To such a point that a lot of people are pulling their money out and are considering investing as a potential alternative to putting something in the bank and seeing it grow. So this is a question. Oh, sorry, it's more a question for me, which is what do we think about these savings products, especially offered by halal institutions, and which are useful for short to medium term savings. So I can talk to this a little bit, which is about, I suppose, a little bit about the history of Islamic finance in the UK and the forefathers who kind of set up Islamic finance in the West. And there was a great webinar which Iqbal Khan talked about, who he set up HSBC Amana here in the UK, and he was talking about this on Islamic markets. So I'd recommend checking that out. He talked about how when Islamic finance was brought to the West, their goal, they faced a choice, right? Should they go with the ideal situation, which is an asset-based type way of making money, an asset-based form of Islamic finance, which is very different to the way in which banks are run here in the Western world? Or should they go with a more debt-based form of Islamic finance, which wasn't the ideal scenario, but would be far easier to set up from a regulatory perspective with structures that were already in place in the West? Now, they went with the latter to ensure that they could actually create something that would help Muslims immediately, rather than waiting, decades potentially for the regulation to catch up with what they were looking at. And at Kestrl, that's what we really feel the time is now to be able to do that. We really feel that, especially with the current situation and what lockdown has caused with the fall in interest rates, there's a real chance for us to move and accelerate and spearhead this move back towards an asset-based form of making return as opposed to debt. Which is why at Kestrl, rather than putting out those sorts of conventional savings products that you're seeing from some of the other Islamic banks in the UK, we're really keen on building this marketplace, a marketplace where you'll be able to view all of these types of products, such as those offered by Wahid Invest and Yielders, which meet your religious obligations and way which you can truly make money, which is avoiding interest and avoiding debt. So something that's truly Islamic. So that's my view on it. I don't know if our guests have any views on that. Otherwise, we can move on to the next.
To add to your point, it's we're almost starting off from the very beginning, very much facing an uphill battle. Unfortunately, the financial world as we know it, the traditional financial world as we know it, is pegged to the dollar and pegged to interest rates. So changing people's mindset and changing people's perception to that is the hardest thing to do. You've grown up in a society that continues to perpetuate this interest rate type financing. So moving away back to what it may have been before all of this order came around in terms of asset backed and having real ownership, which is true to Sharia principles at the end of the day, is changing a mindset, and that is going to be difficult. It's almost a generational thing you have to do. So we're probably at the very beginning of that passageway, because Islamic fintech wasn't really a thing a few years ago. So in order for us to pave that way, I think we've got to continue to educate and provide these alternative options and wait for the market to react. It's been 5, almost 6 years for us now, and we're really now, over the last couple of years, starting to see that really big upwards trajectory of people finding out about us and wanting to invest in alternative options. So it's hard because almost being at the forefront and forefathers of this Islamic fintech revolution, it's been hugely difficult, but at the same time, the rewards are endless going into the future if we're able to penetrate the market, because it's massive. It's absolutely huge.
Absolutely,
we're getting there.
Definitely. So I'm just conscious of time, and I just want to make sure that we get this as one of the final questions, which is, if someone was interested in Yielders, if someone was interested in Wahid Invest, wanted to find out more, wanted to invest, what is the easiest way of doing that? Should we start with you, Abul, with Wahid?
Yeah, so the easiest way is wahidinvest.com. Go online. We have on our homepage, you'll have a goals calculator. There's tabs to talk about the different portfolios, the asset classes. We have the learn section that I mentioned earlier, where you can find out and do a little bit of research about the different portfolios that we have, how they performed, all the different videos in terms of what asset classes are. Sheikh Yasir Qadi's done a number of different videos on there, talking about the fundamentals of investing. Why is it Sharia compliant? Why is it acceptable for us as Muslims to be able to invest in those? So that's a really, really good source of information, and inshallah, to start your halal journeys. And remember, with us, you're able to take advantage of your tax allowances, ISAs, pensions, and all of these kind of things, which are really, really important that we as a community, we're taking advantage of. So it's not just looking at investing, it's making sure that you're investing in a halal way, but also in a tax efficient manner.
Absolutely. Okay, same question to you, Zeeshan. What's the best way to engage with Yielders?
Available at www.yielders.co.uk, Yielders or Yielders UK across all of our social media platforms, LinkedIn, Facebook, Instagram, etc. Again, the platform, once you go on it, what we've devised, and a lot of time, effort, and money has been spent on the platform to understand. All of the information on there, as already touched upon, is consumable, simple in language. We've got a knowledge center on there, loads of information in relation to blogs, videos, and just general information. We've also got an investment calculator per asset, so you're able to calculate what your returns will look like before you decide to invest. All of the information that we have with any of our investment opportunities, you see exactly everything that we do, so it's completely transparent. All of the decisions. There's a profit and loss statement for each of the assets, so you know exactly where all of the money's gone in terms of acquisition, legal costs, etc., etc. So again, a platform to ease the acquisition of shares into real estate is what we've created, and hopefully people echo that sentiment when they land on the platform.
Perfect. And I'll just quickly finish off with Kestrl. So Kestrl, we're due to launch our beta product in 2 weeks' time, inshallah. So 10th of July, we'll be going live with our first few hundred users. The beta product is an open banking enabled budgeting tool where you can plug in multiple bank accounts. You can view all of your finances in one place and really budget and save for the future. And that's just the first step before we, inshallah, will start building our marketplace during the summer and start onboarding people such as Wahid and Yildiz and other types of halal investments before launching our debit card. So if you'd like to be one of the first people to be in line for the debit card, the marketplace, and all the other features, please join our waitlist and check us out. Thank you. So I've been told that we can continue because there's a few other questions in the Q&A. So if Abul, Zeeshan, if you guys are okay sticking around for a little bit, then we can pick those up. As long as the audience is all right, sticking around a little bit. We haven't had too much of a drop off yet. Okay, cool. So this is a little bit of a technical question, which is recently the SEC, which is the regulator in the US, essentially, has allowed actively managed non-transparent ETFs. Now, an ETF is an exchange-traded fund. And some major players in the US are seeking to capitalize on this disruption. What is the panel's take on these types of ETFs? And do you foresee something similar taking place in Islamic investing? I think this is very interesting, especially from Wahid's perspective, as you're quite big in the US. So Abul, do you want to answer that first?
Yeah, I suppose fundamentally it goes back to why was Wahid created in the first place? It's to be Sharia compliant. One of the key fundamentals of being Sharia compliant is making sure that it is open and transparent in terms of what you're investing in. So for us, alhamdulillah, we have our own ETF on the NASDAQ, and we were one of the only ones at the time which were completely Sharia compliant when we listed on the NASDAQ. It's why we were able to steal the ticker, a way of identifying a fund rather than putting in Wahid Invest, USA, FTSE, You can just Google search halal or HLAL, which is our ticker identifier for our fund on Google, and that will take you straight to our fund. From our perspective, it needs to be transparent. Okay, in order for us to be Sharia compliant, it needs to be transparent. You need to understand what you're investing in. So for us, I personally don't think Islamic investing will go down that murky world, because there's already players out there who are doing that, which are non-Sharia compliant. We want to focus on being Sharia compliant. And I think the general Islamic finance market wants to do exactly the same as well. I think this is why we have a customer base which is loyal to us, because of that reason.
Okay, great. Yeah, and just for those who don't know, how would you describe an ETF, an exchange traded fund?
So it's normally a tracker fund. That's how it's deemed on the market. And what you're doing is either tracking a basket of different assets, tracking an index, and so you will buy stock which makes up the vast majority of the constituents of that index. Not every single one, because then you just buy the index itself. So you're trying to mimic or trace a basket of goods or assets, or a particular asset class, is how I would define an ETF to be.
Yeah. So, for example, the Nasdaq is full of many kinds of different stocks from different companies, and an ETF would basically be picking a number of stocks in an equal kind of weighting to what the Nasdaq has. So, an equal number of shares, an equal number of bonds, etc. The idea is that it would track something similar to the Nasdaq in that way.
Yeah, and it's a cost-effective way of having exposure to the Nasdaq itself as well.
Yeah. Okay. And there's another question here, which is. Again, around literacy, but less on just financial, more around Sharia literacy, which is, would you recommend studying the fiqh of money, economics, and investments before actually doing any investments? So, Zeeshan, do you want to start off with this one?
Sure. I think that really depends on your own preferences. Really, it depends on what you're actually looking to achieve. I think gaining knowledge in Islamic finance is hugely beneficial, and I think the way that we've already discussed how we anticipate changes to traditional finance to happen, and effectively we're almost going backwards in time to something that was almost in relation to Islamic finance. We're looking at socially responsible, socially effective investment opportunities away from interest. So I think it's only going to benefit you if you want to learn about Islamic finance from a literacy perspective. I think what we have done and what fintech platforms are allowing for is to have that disseminated information available to people. So maybe not the in-depth knowledge that you may want to have if you're looking to study it, but enough information to be able to make informed decisions about whether or not you want to invest, or what financial product that you want to potentially be involved with. So my suggestion would be, yes, study if you've obviously got the time, but I think more and more there's going to be more readily information available in bite-sized amounts that will allow people to make informed decisions about how they would like to increase their knowledge.
Definitely. It's similar to the active passive argument, isn't it? I think you should know enough to know your obligations as a Muslim and what's right and wrong, but there are companies such as Wahid and such as Yielders which are basically taking on the onus to understand what is Sharia compliant for you, and what can be done in that space. Abul, I think you would agree with that.
Yep.
Okay, perfect. All right, another sort of more general question. What common mistakes do investors make? I suppose we've answered that a little bit already around the investment versus speculation point, which is a lot of people think they get into investment thinking they can make money quite quickly, when in reality it's more of a long-term, it's very much a long-term goal. You should really be looking to get into investments if you have something sort of in the 10, 20 year time frame which you're looking to invest in, and understanding that you can lose your money in the short term as well as make money. But Abul, would you have anything to add to that maybe?
Yeah, I mean, from my perspective at Wahid, the common thing that I see for a lot of our investors who are new to investing in the stock market is they'll go for the highest risk portfolio that we have, which is fine, but it's all equity focused. I think there is a little bit of a gold exposure within that, but it's still heavily weighted towards equities. And I think for the new investor, it's going back to what I said earlier, it is about diversification, because of the fact that, what if another situation like a second, spike happens, as we experienced in the first 3 months of this year, market went down by 30%. But alhamdulillah, our highest risk portfolio, even in that period, went down by only 12% compared to 30% of the general market. Now, if you look at our next highest risk portfolio, which has a little bit more of an exposure to different asset classes, well, actually that only went down by 6%. It's still heavily weighted in equities, but you can see the difference in the sense that when markets went down, it's not going to go down as much. On the flip side, the following month, actually, markets rebounded quite significantly, and our highest risk portfolio made 9% in that 1 month. But again, our second highest made 6.5% in that 1 month as well. So you can see that by having other asset classes in there, it acts as a cushion during turbulent times, but it also means that you can have exposure to other asset classes, which are then going to compensate for downturns in one particular asset class. And I think, again, that's the most important thing. So that's the key learn for any new investor, is diversification is what's going to benefit you the most.
And I think that talks to another question someone put it here, is what do you think about stock screening apps? People like Zoya or Islamically, if you've heard of them.
Yeah.
Which again, I think it talks to, those kind of apps are good if you know what you're doing. If you know exactly, if you pretty much you want to be an active investor and you're able to do things that way. But otherwise, I think we would guide you towards, you'd be better off going with someone who might know what they're doing and going towards a more passive investment strategy if you're looking for that more long-term view.
It's also important to remember that, it's fine and it's great that you are screening on the way in, but it's the continual monitoring of it. And this is where we have our own Sharia review board, which allows our portfolios to be regularly reviewed, and I'm talking regularly. Every quarter we will sit down and have a look at the existing investments that we have, and review and make sure that they are Sharia compliant. In addition to that, if our Sharia review board, who are full-time with us, if they are made aware of other things which may happen outside of that regular time frame, then they will pick and choose. They will screen that particular stock to ensure that it's halal. but as a general rule, every quarter we do that. And that's the key thing, is making sure that if you are going to do single company investment, there is a lot of legwork which needs to be done on your side. And again, it's why I said I don't have the time or the inclination to do all of that myself. So, being somebody who's been in the industry 20 years, I'd much rather somebody else do that for me.
Yeah, definitely. And another question has just come in, which is from someone who's quite young, is thinking about getting into investment for the first time. They say they see a lot of apps and a lot of wealth management apps that say you can begin with as little as £1 and some change and investing your spare change.
Yep.
Would you in your opinions think that there is a minimum amount of investment that someone should consider when they're just starting out for it to actually be effective? Maybe Zeeshan, if we start with you on that.
Yeah, I think it's a perception thing almost. If you're going to invest with £100 on our platform, for example, which is a minimum that we've lowered it to, and the reason behind that predominantly was to allow access, give people the opportunity to understand the mechanism and how it works. But we provide a minimum net return of around 5% on our assets. So over a year, you could earn £5 on your £100. That perception is what I think we need to improve the understanding of. That's £5 free that you've earned throughout a year. You've not had to do anything. You've left your money there and it's earned that for you. Whereas people coming into investment sometimes think, they expect to see larger returns. So the educational piece, especially for new people coming into investments, is to understand that this is purely a residual earner. You're not going to sit here on certainly from our perspective anyway, on a day-to-day basis and see increased amounts of income coming into your portfolio because the markets are changing. However, at the same time, you need to look at your own risk profile. You need to understand what of your disposable income that you are willing to invest. You about it before, principally in terms of thinking about investing, it's to save a certain element first to understand, okay, for a rainy day over the next 6 months, if I don't have a job, then I've got some savings. After you've done that, what amount of funds available to you do you have at a disposable that it's not entirely risk-free? You will see a risk statement across all of our products, all of our marketing material, because at the end of the day, there is an inherent risk with investing. So you need to understand what you're comfortable with and what level of risk you're able to impose effectively on your money. And the higher the risk, the higher reward, obviously. But also on the flip side, that high risk is, it's attainable. You might lose your money in that situation because it is a high risk opportunity. So I think there are a number of factors that have to be taken into account. But I think the good thing to always do is start small, which is why we've allowed a minimum investment of £100. We've got a reinvestment rate on our platform of around 68%. So that's people understanding how the mechanism works, coming back to then reinvest. So you tested the methodology maybe for a month or two, and then 4% of our investors are coming back to reinvest because they understand, they like the product, and they're seeing the consistency of the return. So I think it's almost very difficult to have a blanket response. It's very much dependent on your personal circumstances and your risk appetite effectively as an investor.
Yeah, absolutely. And it's a very responsible and a disciplined form of investment to invest according to what your personal means are, your circumstances, and the goals that you're actually trying to achieve within a certain time frame. A technical question that has just come in is around: are customers free to withdraw and sell their own share to someone else? And it's, I think, different for Wahid versus Yielders. So Abul, do you want to talk about Wahid, and then we'll jump to Yielders on that?
So yeah, so at Wahid, everything that you're buying is obviously, being an FCA regulated institution, means that we are only investing in exchange traded investments, which means that they're highly liquid. There will always be a buyer. I'm talking about investments in companies like Amazon or Microsoft, Intel, all of these kind of things. So if you want to sell, it'd be your share that you'll sell and somebody else will buy it. So that you don't need to sell it to another investor. There'll always be a market.
So it just goes straight into the secondary market.
Yeah.
If you want to exit Wahid. And how easy is it to exit your investments in Wahid? Can you do that at any time?
Anytime whatsoever. So in the middle of it last night, I had one customer say to me, "Look, Abul, I'm really sorry, but I need to make a withdrawal." Yeah, not a problem. Just told him, hit the withdraw button on your online login portal, and we'll start that process straight away. Within 10 days, you'll have your money.
Perfect. Okay. And Zeeshan, what about from Yielders' perspective?
Yeah, for us as well, I think it's hugely important to have liquidity available to investors. The inherent risk effectively with a crowdfunding model similar to ours is the secondary market and ensuring there's enough liquidity available. Alhamdulillah, from our perspective, very liquid. As I mentioned over these past 3 months with the COVID situation, we've not really listed any new assets onto the platform, but there's been a number of people trading within the secondary market, so listing their shares and being bought up. And within a 24-hour period, everything has managed to sell out on the platform, which shows, fantastic liquidity levels on the platform. And yeah, again, it's very simple for people to do so. Investment opportunity within your portfolio, clear instructions for you to follow, and it is a very simple, straightforward process. And I think that's hugely important for people investing, especially taking into account what we've been going through. There are people that are struggling and may have invested 2 or 3 years ago, had that disposable income or investment income to go for, and now based on whatever their circumstances don't and need that money back. So yeah, alhamdulillah, very liquid secondary market from our perspective as well, which is good signs for investors.
And a related question to that, Zeeshan, which is about when is Yielders going to be able to extend new opportunities on its platform and bring in some new properties for people to invest in?
We're working very hard behind the scenes at the moment. Obviously, as I said, these 3 months, predominantly because of the supply chain and the effects to the real estate market, we decided to just take a step back and not list anything. The new asset will be available in 2 weeks. The interesting thing is keeping up with demand now. It's almost sort of shifted in our favor. Before it was, we may have an asset online that might be there for a month or so. Now it's the exact opposite. We'll list something, it will sell out straight away, which is great problems to have. I think what people just need to be wary of actually acquiring an asset, we've streamlined the process down to a 2 to 4 week period. Generally speaking, if you're looking at acquiring real estate, it's a minimum of 6 to 8 weeks. So we've really streamlined the processes with all of the sort of third-party involvements. We've got solicitors, conveyancers, etc. It's just about making sure that the deals that we do provide are the due diligence conducted on them to the level that we require. They're matching our minimum thresholds, and then the delivery of that to our investors. So definitely keep your eyes out in the next couple of weeks. There'll be one, and then shortly after there'll be a few more in the pipeline. It's something that we're working really hard on at the moment to make sure there's enough product to go around, because the interest in the product has grown massively. So yeah, keep your eyes peeled. We do have communications that go out regularly as well. So if you are an investor or a user on our platform already, you will be updated when a new asset is available, but it's coming within the next couple of weeks, inshallah.
Yeah. So if you check out Yielders on social media, sign up to their newsletter, you'll be informed immediately when that takes place. Okay, I think we should look to wrap it up now, but I'll just answer one more question, which was just quickly directed at Kestrl, to how is Kestrl planning on becoming different to the likes of Monzo and Starling? So I'll answer that in 2 ways. The first one, which is most relevant for this webinar, is the marketplace. The thing which Monzo and Starling don't offer you is a way in which you can marry your financial goals with your personal values. And for many Muslims, personal values mean something which meet their religious obligations, avoiding interest and avoiding, in investing into things which don't meet the halal boundaries. So for example, gambling, alcohol, those sorts of things. What we're doing for the first time is creating the UK's first halal marketplace, where we're looking to input all of these brands, these fintechs, and these Islamic financial firms and products all into one place, where you'll be able to view, compare these products and purchase them directly from the app. So that's one of the first big differences between us and some of the conventional fintechs. The second big difference, which not a lot of people realize, is so Monzo and Starling Bank are exactly that. They are banks, and they're regulated and licensed banks. Now, a lot of people don't realize is that even if your money is put in a current account and not generating interest or generating a tiny amount of interest, your money is not actually there in your current account at all times. Up to 70% of your money will actually be being loaned out to people for the bank to be generating interest on, which as a Muslim, a lot of Muslims are not actually very comfortable with that knowledge, knowing that their money is actually being used to generate interest in the background. So our guarantee at Kestrl is that your money will never be touched. It will never be lent out to anyone to generate interest. It will sit securely in a deposit, and the only person who's able to access it is you, the customer. So that's our sort of guarantee, and it's our it's our thesis as to why we're different from conventional banks in this sector. So yeah, that wraps it up. There were quite a few other questions. If you do have any other questions that we didn't get around to answering, please just drop me a line on info@kestrl.co.uk, and we'll arrange to answer those. And please, guys, do you want to maybe drop in your own contact details for how to get in touch with you for any specific questions around your brands?
Similarly, I'll put the Yildiz email address in there. The team, if you have any questions in relation to what we've spoken about today, or just generally, please feel free to drop us a line, and someone in the team will get back to you. And if not, I'm happy to do so personally as well.
Yeah, I've put my email address on the group chat. It's abul@wahidinvest.com. There was one question from Connotations podcast that we weren't able to go through, but please email me and we can talk about that.
Perfect. And Zeeshan, I'm not sure your email address has gone to everyone. If you want to share that, yeah, just before we log out. And the final thing is a recording of this webinar will be being made available. We'll send it around to everyone who was on the participant list. So if you sent in your email address and you got an invite, you'll get the recording sent directly to you. Otherwise, it will become available over the weekend on the Kestrl YouTube channel, as well as a few other locations. So look out for that. So, okay, perfect. So thank you very much. Assalamu alaikum, everyone. And thank you for tuning in. And Jummah Mubarak.
Assalamu alaikum.
Thank you. Assalamu alaikum. Bye.